Okay, folks, sorry for the delay there. I'm assuming that we've got screen, we've got audio. So guys, thank you for joining me. This is Mario Draghi from FX Instructor, and I'm here to cover the ECB announcement today. Okay, so why is this ECB announcement so important? Why is it different from the ones we've had before? Because we find ourselves, the ECB finds itself in a situation where, rather, we find ourselves in a situation where the ECB and the other major central bank, the Fed, will be diverging their policy directions. Okay? At a time when the US is talking about rate hikes and people are very excited about tomorrow's non-farm payrolls, we've got plenty of speculation that says that we will likely see a form of monetary easing from the ECB. Whatever that form is, we'll try to figure out and we'll try to plan our way into what can we do if something happens. Now let's move on and let's first talk about what exactly is the ECB's job. And according to the Lisbon Treaty, the main function of the ECB is price stability. Okay, before dealing with issues like growth, like unemployment, the ECB's main task is to make sure that there is price stability. And the idea here is if a country or an economic zone, an economic union has price stability, then you foster sustainable growth. You are able to prevent sudden shifts in on demographically where wealth is located. And this really comes from, or rather, this focus on price stability is the result of the collective experience of the Eurozone, especially the key members of the Eurozone like Germany, which had its period of hyperinflation back in the 1900s. So before anything else, the ECB's job is to maintain price stability, and the rest of it, trying to make sure that people have jobs, trying to make sure that the economy is going well, follows that question of price stability. So how do we define the price stability mission of the ECB? Well, we actually have a number to watch out for that. When they say price stability, that means that your CPI data or your harmonized index of consumer prices ought to read 2% on an annualized basis. Okay? So the ECB doesn't want the ECB charter indicates that we don't want to be in a situation where prices are dropping, nor do we want to be in a situation where prices are going up by multiples, by tens every day. So they don't want hyperinflation, they don't want disinflation. And that definition says on a year-on-year basis, your CPI ought to be 2%. Now, where exactly is the ECB is with respect to its decision today? Just what are the considerations that the ECB has? Well, remember that the primary consideration of the ECB is price stability. And if you look at the data that we've been getting from the ECB, from the Eurozone, where exactly are we in terms of saying that prices are stable? And if you look at your headline figure for HICP, your harmonized index for consumer prices, you'll note that it's at 0.1%. So we are far from the point where people ought to be worried about inflation pressures. Although interestingly, we actually have what we call your core HICP. Okay? And your core HICP is reading 1.1%. But again, 1.1% is still very far from the 2% objective that the ECB has. So if you think of it from this perspective, one can say that the main concern of the ECB is how do we raise inflation? How do we push inflation to the levels that to the 2% mandated target that we have? So that's a primary question that the ECB faces. Now, other issues that the ECB has to deal with: growth in the region is slow, 1.6% year on year. Last quarter, growth was at 0.3%. Your economic sentiment's down. Your unemployment rate in the Eurozone is pretty high at 10.7%. But the thing about the ECB's problems, at least, is that the solution to the ECB's problems actually fits in with each other. It's actually the nice thing about the problems that the ECB faces is that the measures that they need to take are not contrarian. So what do we mean by this? ECB is facing a situation of disinflation. It has a high unemployment rate. It has a high unemployment rate levels, and to fix your high unemployment rate, to fix your disinflation, actually requires only one form of measure. So one nice thing about the problems of the ECB, it doesn't need to address the contrarian, the contrary problems, the contradicting problems that someone like the People's Bank of China faces, or even the Fed faces. Their solution is to just adopt an easy monetary policy some more. All right, let's take a look at other considerations first of the ECB. What are the threats that the ECB is afraid of? For one, there's been a slowdown in the emerging markets, particularly in China. And China is the biggest trading partner, the second biggest trading partner of the Eurozone. And if your trading partner is having problems, if the economy of your trading partner is slowing down, you face the risk that your exports to your trading partner could also slow down. So the ECB needs to solve that as well. How do we make sure that the exports of Eurozone industry will be competitive? Another problem that the ECB is concerned of is the financial markets. It's been in turmoil. You have a collapse in China, triggering some follow-through declines. And you have all this talk right now about how the stock market is poised at going into a bear market. And then you've got economic evidence suggesting that the global economy is already growing at its weakest since after your 2007-2008 crisis. So again, the nice thing about the problems that the ECB is facing is that the solution to their problems requires only one form of action. It doesn't require them to take contradicting policies. So what does this suggest about the decision that's facing us in about, let me see how many minutes we're from this decision. In about 14 minutes. What does this suggest about what will we get from the ECB in the next 14 minutes? The best indicator on what the ECB could be doing would be what Mario Draghi, the ECB president, has said. And his latest statement before the European Banking Congress was a reiteration of what he said before. And that is that the ECB is ready to take measures that they think necessary in order to push inflation to that 2% target. Okay, so Mario Draghi said, hey, look, our job says inflation has to be 2% in the long run, or near that 2% level. And from what we've seen, HICP, which is their measure of inflation, is at 0.1%. The core HICP, core CPI, is at 1.1%. Numbers that are well below that mandated figure. So the policy move, as far as we're concerned, is obvious. The ECB needs to do something. The ECB needs to ease. Now, the ECB, to do its job, has two types of policy tools. You've got your open market operations and you've got interest rates. Let's look at the current policies that the ECB is implementing. We know that the deposit rate in the ECB is already 0.2, negative, which means that if you're a bank and you put money in the ECB, they're going to give you, or they're actually going to charge you an interest of 0.2%. Instead of you getting some money, if you park your money in the bank, you're actually penalized. Okay? This is a form of encouraging banks to lend to people. Effectively, the ECB is saying, hey, look, don't put your money in our vault. Go find people in business. Go find worthwhile investment projects that could potentially give you some form of return. And not just rely on us printing some money and then paying you. Okay? In fact, we will charge you. That's what the ECB is saying. Other interest rates in the Eurozone, your fixed rate, which is really what a lot of people look at, a lot of the popular websites look at, is at 0.05%, which means that, hey, we're pretty close to the risk of even your fixed rate going negative. And then you have your marginal lending facility. Other programs that the ECB has, we of course have your asset purchase facility. And where is it right now? The ECB has been buying bonds to the tune of 60 billion euros every month since January. And supposedly the program will last until 2016. So the question for us would be, what exactly will be the steps that the ECB is going to take? What are the potential policy actions that they could have? Well, guys, what has the market been talking about? What's the current speculation? The first speculation is that they're just going to boost the asset purchase program. And what does this mean? Could be a lot of ways to do this. Either the ECB says, look, right now the asset purchase program buys 60 billion worth of government bonds and some high-end securities. One way of boosting the asset purchase program would be, say, instead of buying 60, we will buy 80 billion, which means that they'll be spending another 20 billion more. That's quantitative easing. And if a central bank does that, for us, the currency trader, effectively the effect would be to weaken the currency. Another way of boosting the asset purchase program would be for the ECB to say, hey, look, one of my main problems is that you banks are not lending to the higher risk people. So why don't we do this? Why don't I buy lower quality bonds, municipal bonds, or even corporate bonds, so that local governments, businesses can have money. Local governments could have money to maybe improve the infrastructure in their area. Businesses could have money to maybe hire some more or invest in capital goods. So these are the two ways that asset purchase program could be expanded, could be boosted. Either they print more money or they buy lower quality stuff. Because right now, they are only buying high-end investment grade bonds, which means that everybody else actually wants those bonds as well. So it's not really freeing up money for the more marginalized sectors in the economy. Now, the other way that a central bank can impact the economy, as we said, is through moving interest rates. Right now, the deposit rate is at minus 0.2, fixed rate at 0.05, lending rate at 0.30. What if the ECB decides to cut rates? Economics 101 tells us that if a central bank lowers interest rates, then the value of the currency would go down, your euro would go down. So that is something that we should be watching out for from the announcement in about 7 minutes. Are they actually going to cut rates across the board? Okay. Are they going to push that deposit rate to minus 0.3, lending rate to 0, meaning that they're actually giving money away already? Now, other people are saying perhaps the most conservative way that the ECB, the most conservative step that the ECB would take would be doing a tiered approach to interest rates. What does this mean? Like we said earlier, a lot of people who have money have kept, a lot of the banks, a lot of the institutions that have money have been putting their money in the ECB's vaults. One way for the ECB to encourage them would be everybody will just get negative interest rates, or another method would be, all right, if you're a bank and you supposedly have 20 billion in free money and you just decided to park that money with us, then here's what we're going to do. If you park a lot of money in the ECB, then you will be penalized even further. Instead of minus 0.20 in the deposit rate, we will give you minus 0.3 or maybe minus 0.4, minus 0.5. And if you're a bank that's smaller and you're parking a smaller amount of money in the ECB, we'll also penalize you, but not as much. We'll just charge you minus 0.1. Now, this is not exactly something that has been done by the ECB before. It would be a novel approach. It will be a way to signal that the ECB is serious about providing liquidity to the system, but it's not desperate, because cutting rates across the board right now could sound desperate. Raising the asset purchase program, or boosting the asset purchase program by buying low quality bonds, low quality securities, would sound desperate. And as a central bank, you also don't want to scare people by adopting very radical measures. In fact, of the three options that the ECB has, I tend to think that this is the more likely measure that they will take. Regardless of which measure they take, however, as far as the currency impact is concerned, we should be expecting weakness. The only scenario right now where I would imagine that your euro is going to strengthen would be the ECB says, okay, you know what, we recognize, in fact, we've been pointing out these problems, but now is not the time for us to do anything. So if you're out there and you're thinking, I want to trade, and all of a sudden you hear an argument that says, now is not the time for us to do anything, then to me that argues, why don't you buy your euro? Okay, the no action scenario to us would suggest your euro ought to strengthen, because everyone's expecting that some measure will be taken. Personally, I'm looking for a tiered rate system being implemented in the Eurozone. Now, what if, when should we be really aggressive about dumping the euro? Well, if they decide across the board, we're going to cut rates, then I would point out that however low your euro is like now, we've actually seen lower levels earlier in the year. Your 104.55 area. So euro may be low at this point at 105.98, but it could go even lower. And what if they really go for, we will start buying those low quality bonds. That's outright, what if they go for a combination of buying those low quality bonds and expanding the size of their bond purchases? To me, that's outright signal that they really want to devalue, but they can't just say it outright. And under those conditions, when your euro was below 1.0. If they do a combination of all the policy measures that they can take, to me sounds very aggressive. And as far as trading is concerned, I would say minimum objective would be to get to the earlier lows of the year. And we ought to start thinking about, can we actually get to parity? Now, guys, we're less than a minute away from our decision. So let's see the news. If you have any questions, feel free to raise it. Unlike your normal ECB live coverage, we don't actually have to wait for, I think, we don't have to wait for the press conference to find something, for something to happen. This thing's really, really crazy right now. All right, folks. This is really very noisy. Let me check the news. Hey, thanks, Anthony. So, leave rates unchanged. Let's listen some more. Whether they are actually going to expand the asset purchase program. Oh, thanks for the link. We actually find our euro spiking right now. I'd be very, very careful about joining the side. Yeah, I see it. Remember that we still have to see what's happening with the asset purchase facility. Or rather, sorry, with the asset purchase program. This is just the interest rate announcement. Another angle would be your APP. I guess that means we will actually have to. Oh, thanks there. Okay, more details. Deposit rate cut by 10 BPS. So I would view this actually as an argument to start thinking about shorting whenever we find our euro stabilizing at a high enough price. Hey, Anthony, thanks for that. So, guys, what are we supposed to watch out for now? We've had our decision. They've cut the deposit rate even further. That was one of our scenarios. Next scenario for us, or next thing that we need to know, would be if they're going to increase the asset purchase program. No word on that yet, but still we have something. We have a cut in the deposit rate. Last time they did this was in September 2014. If you look at the chart, what happened then? It was actually right around this period here. The last time that they cut the deposit rate. All right, guys, any chart, any currency pair that you'd like us to look into? We just switch views. So our knee-jerk response is some disappointment, but we still ended up with a rate cut. We still have the potential for a divergence in policy between the Eurozone. All right, let me see GBPNZD between the Eurozone and the US. So at this point, I will take any rally that I get in your euro as an opportunity to potentially get a better price from me to look for shorts. But let's see GBPNZD first. Which charts? So it's actually an ECB event related pair, but let's see what can be done with this. What do we know right now? And I'm just looking at some of the daily scale. Okay, so what do we know? Average range of 228. We've only had 149. There's room to maneuver. We have a new low for the day. We've been trending lower. As far as news lately has been concerned, we've been disappointed about things that we've been hearing from the UK. We've been getting bad reports out of the UK. So Fundi-wise, I would say there's enough reason to look for further weakness in your cable. Let me add some more stuff. All right, guys. Actually running out of time. But as far as GBPNZD is concerned, focus would be on the track selling it. As far as today is concerned, any approach the pivot at 25.35 for me would be an opportunity for us to take the sell side. Anthony, yep, it's a bit strange that you've got DAX heading lower given the kind of news that we've had. I would suggest that we really focus now on any announcement, any update on the asset purchase program, any expansion on it, or whether they increase the size of it, they extend it beyond September 2016, or they start saying we will buy lower quality assets. We hear any of those things, and to me, that's argument for weakness. FT is crazy. But thanks for that. Guys, I think we've run out of time. Thank you for joining. Sorry for the late start. I don't know what happened there. And I hope to see you next time. Thanks for coming, folks.